Everyone keeps asking me the same question. Should I wait to buy or sell here in San Diego? And my answer might surprise you because this market right now, it's not hot and it's not crashing. It's something completely different. And if you understand it, there's actual real opportunity here. So let me show you what the data from January is telling us about the San Diego market. Hey, I'm Matt with the Thornberg Home Group, and every month I break down the San Diego market data so that you can make smart decisions without the fluff. Today, we're diving into the January 2026 data, and this is one of the more interesting markets that we've seen in a while. It is not hot and it's not cold. It's strategic. And if you play this right, there's actual opportunity here. So let's talk numbers, trends, and what you should actually do with this information. What's happening overall? All right, first, the headlines. The San Diego market right now is stabilizing. It's not surging and it's not crashing, it's stabilizing. The median sold price in San Diego for January came in right around $875,000. And here's the thing, that number has basically been flat year over year. We're talking a very slight increase in some neighborhoods and slight dips in others, but overall, holding pretty steady. Now, sellers are listing homes still between 1.2 and 1.5 million as the median, which tells you that there's still optimism out there. But here's the reality. Fewer than 3% of San Diego homes are affordable to the San Diego median income for a household. Translation is that you need to be making well over $225,000 a year to comfortably buy the median priced home here in San Diego. Now, that's not judgment, that's just math. And it's also why we're seeing this wait and see behavior from buyers. The vibe right now is cautious. Sellers are adjusting, and the market is rewarding people who price things right and penalizing everyone else. So if you're thinking about making a move this year, understanding this dynamic is everything. Let's talk inventory. Inventory is up, especially for condos and townhouses. We saw a 25 to 30% year over year increase in attached unit inventory, and that is significant. Detached homes are still tighter. It's not crazy tight like it was back in 2021, but tighter than condos for sure. Now, here's what that means. If you're selling a detached home in a desirable neighborhood and you price it right, you're still going to get under contract in 14 days or less. We are seeing that consistently. But if you're selling a condo, expect 30 to 45 days on market at the minimum, and maybe even longer if you're overpriced. Buyers have options now. They're comparing, they're negotiating. They're not just writing offers on the first thing that they see. Now, the balanced market question. A truly balanced market is about 5 to 6 months of inventory, and we're not there yet. We're moving in that direction, especially in certain segments of the market, but we're not there yet. And honestly, this is good news for buyers who have been sitting on the sidelines. You've got more leverage than you had. So if you know how to use it, you've got great opportunities. Now, a quick favor, please. If you're finding this helpful, go ahead and hit those like and subscribe buttons. I put these market updates out every single month so you can stay ahead of what's actually happening in the San Diego real estate market. Now, about pricing. The pricing game has changed. Here's a stat that tells you pretty much everything you need to know about this market. Only about 60% of homes sold at or above list price in January. Let me say that again. 40% of homes sold below asking. This is not bidding war market anymore. This is a get your pricing right or sit on the market situation. Overpriced listings are getting punished. And I mean that very literally. If you price your home 10 to 15% above market value, hoping that someone's going to bite and you're going to get more money than you originally thought, then you're going to sit there a while and buyers are going to move on other properties. Smart sellers right now who are winning are pricing strategically from day one. They're investing in AI-driven marketing and professional presentations, and they are understanding their competition. They're not chasing comps from 2022, hoping to sell their house for insane amounts and end up helping sell their neighbor's house. They're being strategic. Now, what smart buyers are doing. Buyers have options, but you still need to move decisively on the right property. Well-priced homes are still going fast, but overpriced ones, you can negotiate. You can ask for concessions and you can actually have a conversation instead of just throwing money hoping that they pick you. Here at the Thornberg Home Group, we've actually been able to get 9 out of 10 of our very first offers written accepted for clients because we do the work up front. There's no guessing and no hoping, just a ton of strategy. Now let's talk rates. Mortgage rates in January hovered right around 6.5%. Zillow and Fannie Mae are both predicting rates will stay around 6% for most of 2026. Not amazing, but better than 7% and definitely better than 8%. So here's the reality. Rates are not going back to 3%, and to be honest, you don't want them to. If you're waiting for that, you're going to be renting for a very, very long time. There is an affordability catch-22 here. Even with the rates easing a bit, monthly payment pressures are still real. An $875,000 home at 6.5% is a very different payment than the same home at 3.5%. But here's the thing. Home values are still projected to grow about 3% this year, according to Zillow. So if you wait for perfect conditions, you might just be buying the same home for more money next year. The sweet spot, there actually is a sweet spot. The sweet spot is a window right now. And some people are calling it a sweet spot for buyers who have more negotiating power. Inventory is improving, but still not great. And rates have pretty much stabilized. It's not perfect, but it is real. And if you've been waiting for the right time to make a move, this might be it. Now, the condo situation. Condos are struggling. If you're thinking about condos, you need to know this. Southern California condo sales dropped about 35% recently. That's a massive slump. And it is because buyers are stretched thin on affordability. HOA fees keep climbing. Inventory is oversupplied in some areas when it comes to condos, not single family houses. And there is an insurance crisis here in California with condos. A lot of condos are having trouble getting their entire buildings insured, which means that less deals are going through because that affects buyers' financing. And not to mention, people want yards. People want space nowadays. They want to be outside. So if you're a condo seller, you need to be realistic about pricing and aggressive about marketing. This is not a forgiving segment right now. If you're a condo buyer, you've got leverage. Use it. All right, the bottom line. So here's what you need to know about the San Diego market right now. It's stable, it's strategic, it's not a frenzy. It's not a fire sale. If you're buying, focus on well-priced properties, negotiate hard, and don't wait for perfect conditions that are not coming. If you're selling, price it right from day one. Market it like a pro, and don't chase comps from the pandemic that are not relevant anymore. If you're just watching and waiting, that's fine too, but understand that affordability isn't getting dramatically better anytime soon, unfortunately, and home values are still growing. So the real question is, what is your plan? Because the market doesn't really care about perfect timing. It cares about smart strategy. So if you want to talk about your specific situation with no pressure, just real strategy and some helpful information, comment 2026 below or click the link in the bio for a personal strategy session, and we'll build something together that actually works for you. Thanks for watching. I'll see you in the next one.